Hello everyone, and welcome to Onchain update for the 15th of June. So we have on our hands a dip that just keeps on dipping at this point in time. We're hovering around 25,000 at the moment for Bitcoin. Obviously, given a pretty chaotic week, right? SEC and Binance and Coinbase, and this morning all the news about DeFi protocols. People lending, cashing out Curve tokens, and three pools and Tether getting, there's all sorts of stuff going on, right? It's a bit of chaos. So let's just keep that in mind. The other thing to just keep in mind is the significant divergence we've seen between stock market performance and Bitcoin performance. And look, to be honest, that kind of makes sense, right? You've got a lot of overheads, in this industry. There's a lot of uncertainty, a lot of people who aren't quite sure. Now, look, again, as I always say, I'm in no place to kind of predict the future. And there's no question that we've broken down below the 200-day moving average. There's a whole bunch of things that indicate short-term weakness is on the horizon. And let's not kid ourselves and say that if we get a major downturn in the stock market, which, by the way, the thing just keeps going up. So that is kind of the not the consensus view at this point in time. I think there's a lot of people who are positioned for kind of recession and doom and all that kind of stuff. And when everybody is positioned for the negative, you get some moves to the upside. So I'm not going to pretend that I know how this all plays out, but my kind of instincts here, my gut feel, I still look at commodity prices and I still see them really struggling and languishing. I also don't necessarily think that we're going to be heading into a recession in the near term. I think it's, probably a 6 month away type thing. Because the market really is, and the economy is in a very strange place where it's kind of acclimatizing to these interest rates. It is a really hard market to read. So, with that as context, really at the end of the day, I mean, when you see a market like this, I think the most valuable piece of information that I can go through is the response. How are investors responding? And what I am going to do here is kind of just, I mean, obviously I generally focus on Bitcoin, and I am going to focus on Bitcoin for this session. But I do believe that there is a divergence that is at play at the very minimum, where it's Bitcoin, Ethereum, and everything else. And sorry, there's Bitcoin, Ethereum in kind of a bucket. Bitcoin, I believe, is probably going to outperform in that bucket, even if it is. I think the bucket of the crypto industry is going to struggle for a little while, just while all this uncertainty. I mean, who knows where this whole regulatory thing goes over the next 6 months, 12 months. But I do believe that if there is a asset in the space that's going to outperform, I do think that Bitcoin is in that position. It just has the clarity. It's got the institutional grade status to it. It has a far more developed custody market. And as we're seeing in the US, right, some of these crypto exchanges are going to come under a bit of fire. Bitcoin, really, there's Bitcoin only exchanges out there. There's Bitcoin only institutional custody solutions. In my view, the infrastructure to own it for larger entities, plus the regulatory clarity, is going to be a relative tailwind, not necessarily a global tailwind because the market's still under pressure, but a relative tailwind. So really, I don't like the stock market performance right now. It's just going vertical at this point, and I believe that's a lot of positioning, but it doesn't feel like a very healthy rally. It feels like a positional rally. So I'm not really in the camp where I think it's a new bull market. I think we're still going to be choppy and sideways and volatile. But at the end of the day, what do any of us know about this kind of market? It is chaos out there. So anyway, with all that as pretext, what I want to focus on today is the investor response. And we're going to look at this from a few different angles: supply balances, realized profit loss, things like that. And just really goes through some choice cut metrics that I think try to help us understand how are Bitcoiners responding to this current event. And really, that's going to give us a bit of an insight into, at the very least, what's the rest of the market doing? What are all the other players at the poker table? How are they playing their hands? And that could hopefully give us a bit of insight into how we can kind of think about this market ourselves. So anyway, let's get stuck into it. Okay, so I want to start with, I'm going to go through a couple of dashboards. I really want to just go to some choice cuts that I think tells the story. So we're starting on the technical analysis toolbox. We've finally got a little bit of a dip, right? It's still not the most significant, nowhere near what we've seen in previous, let's call it bull market rallies. And this is a bit of a theme that I think you're going to catch on to here. We still haven't given much back, right? It's pretty dire out there, right? And I know we're still in a correction, and there's every chance that we want to head lower. But I'll tell you what, this is still not a major correction, right? the market has seen far more volatile times. It's a bit of a takeaway. I don't know. It's quite interesting observing, and we've got to remember there's a lot of less liquidity at the moment. Things should be volatile as anything. Market makers are pulled back, money's getting pulled back, regulatory pressures. We're still just not giving back that much. It stands out to me as quite a remarkable. I don't know. I guess resilience is the only word I can really ascribe to it. Probably of most note, we have broken down below the 200 week moving average here in red. The next stop, in my view, for like a real support is the 200 day at 23,650, which again, at the time of recording, I mean, that's about 5% below where we currently are. So, you know, a 5% dip from here still wouldn't even register on that previous chart, getting to the first 21% correction, right? It's a Fibonacci level. So again, I mean, this to me is a very let's call it structured. In terms of price action, this is a very contained trading channel. We haven't really seen, I mean, this was kind of a bit of a waterfall type moment. And you can see here that this was waterfalls, right? The bear market's characterized by these just angry sell-offs where there's just no buyers. And I'm just not seeing that. I still see a lot of buy side for BTC, especially given the news. Like, we really haven't done much over the last 2 weeks, despite the gravity of everything that's going on. Trading down to the bottom end of the Bollinger Bands, these are starting to expand out, right? A little bit of volatility, not a huge amount of volatility, nothing compared to the deadness we saw at the start of the year. But I mean, you know, it still feels quite structured, to be honest. Like that's kind of a big takeaway I've got at the moment. All of our technical indicators, by the way, RSI kind of has nothing still. Stochastics is still kind of trading in negative territory, and the MACD is still in negative territory. So again, there's no kind of major momentum here. I'm also not feeling an urge, right, to be jumping in and buying the dip because this is it. It's got to go up from here. But I'm also not seeing the complete and total doom and gloom. Volatility is picking up just a little bit, but I mean, it's still pretty insignificant, to be perfectly frank. So that's with a bit of market structure. Now let's move across and look at balance changes, right? How are Bitcoin investors treating this thing? So here again, we're looking at the 30-day change in the balances, and we are seeing shrimp picking up their buying. I mean, unstoppable stuff. They just don't care, right? They are accumulating at a non-trivial rate, 30,000 coins a month on the shrimp alone. Crabs are also seeing an uptick. I mean, this to me looks like people who just do not care, right? Bitcoin, it makes sense to them. So it's doomy out there, but there's buy side, right? And again, we're talking about shrimps and crab here. That's the small change. Well, if we look at shrimps, crabs, and fish, this is everybody who's got under 10 BTC in their wallet. Actually, no, under 100, because fish are 10 to 100. So under 100 BTC in their wallet, that's the vast majority of people. If we look at it relative to the amount of mined coins, we're talking about 248%. So for every coin that's mined, an additional 1.48 coins are getting taken off the market. So the shrimp alone are taking all the coins off the miners. So shrimp just cover the mining issuance. You've then got crabs and fish adding an additional 148% on top of that, right? I mean, it's non-trivial. And if we think about the halving being, 300 or under a year away, 310 days or 312 days away, I mean, the mathematics, this is the, I mean, call it the number go up technology, that the coins are just getting absorbed here, and it's a real thing. It just seems to be happening, right? We have uptrends. This is the fish plus shark, so from 10 to 1,000 BTC, ticking higher, right? We have upticks in all of these cohorts. They're just all adding to their balances. So the question is, where are these coins coming from? Oh, by the way, if we add fish and shark, so 10 to 1,000 BTC, they're buying another 100% of all the coins, right? There's a bit of a double count, obviously, with the fish. They're in both categories. I think we're talking about something like 270 or 280% of the coins being mined are getting soaked up by investors right now. Miners are distributing quite a bit, which we'll see in just a second. Whales are also net distributors, but to be perfectly honest, they've kind of been non-players for some time, and they've been net distributors. We've talked about this before. They've been net distributors for many, many years. This is not a new phenomenon. This is actually like a 7-8-year-old phenomena that whales have been net distributors. So where are these coins coming from? Where is my chart? Here it is. They're coming out of exchanges, right? So we said that there's 100% coming from miners because they pretty much spend everything. Here's your additional, just over the last 30 days, we have seen 135% additional coins coming of the mine supply. So you've got 900 per day. You've got 900 times 1.35 additional coming out of exchanges. So, I mean, it's demand. It looks like demand. I don't know how else to kind of frame it. I mean, even though we keep trading lower, it is buy side pressure. It is taking place. So the next thing to look at, that's kind of a bit of a demand side equation. What do we have in terms of people going, oh, I need to sell this thing, get me out of it? Well, realized profit and loss is a really nice way to look at it. Obviously, we can look at supply going in and out of exchanges, but what we're seeing is that coins are net flowing out. If we look at things from a realized profit and loss perspective, it shows us if people who have coins in massive profit are bailing out, coins in massive loss are bailing out. Profit and loss is just a really good tool to understand this sentiment. And we've talked about this a few times, so I won't dwell on it. Nothing, just nothing is happening. Realized loss is, it's picking up, but it's pretty soft given the scale of what's going on. Realized profit is it's nothing. It really is quite remarkable. Now, if we look at this from a bull market perspective, right, because I still believe that that's where we are, right? A bit of doom, wall of worry is kind of the way things play out. And again, I still believe we could have some downside here, but I think it's downside within the context of a hated disbelief rally. I really do think that's kind of the macro structure, the multi-month type time frame. You'll see we look at lots of these things: profit and loss ratios, SOPR, MVRV. They're all interrelated, profit and loss, but really what we're looking for is bull market behavior, which is retests or even better, beautiful undercuts of the neutral level, right? Which is basically when people are at their break-even price, do they keep bailing out? Or when they get to their break-even, are they buying the dip? Or do they sell the rip? Sell the rip is bear market mentality. Buy the dip is bull market mentality. So we actually want to see these retests of one and then a nice bounce. Retest, retest, retest. We're retesting as we speak. So if this is a bull market, we should actually see some kind of a bounce in the relatively near term, right? So we're kind of at that decision point. Let's see what the market can get through. And we'll look at this from a few. You can see here, entity adjusted SOPR. We are on the retest level. Now, this thing here isn't screaming down below, right? As we go into bear market territory, this thing likes to trade below because people are literally capitulating out. It's kind of hard to be capitulating out when no one's selling coins with any kind of real profit or loss. Nobody seems to care about the news, and by and large, people are adding to their balance. So it feels like more buy the dip mentality. I see a lot more evidence behind there is demand underneath us, even if books are thin, even if books are illiquid, even if we've got downside price action. Corrections happen in bull markets all the time. In fact, the market spends a huge amount of time, most of the time, in a correction because it's kind of shaking out all those people who they're not here for what Bitcoin's about, right? So we've got retests across the board. Short-term holders, SOPR, I'll come back to this because I've got a whole dashboard on short-term holders. These two, this is total realized profit and loss, so how much value is being realized versus transaction volume. Downtrends, the trend is more important than the absolute value. Downtrend means people are just not moving coins with any kind of profit or loss. It is a massively strong downtrend. This typically happens prior to periods of explosive maneuvers, right? It can be in both directions, right? You can see here in November, we had a massive decline before a 50% capitulation. We also had massive declines right before the 2021 bull market. It's getting to the point of decision. And my read from this is that the current price range is not sufficient to motivate people to spend their coins. So it's a volatility indicator. We need price to go either up a lot or down a lot to engage sellers. Before people want to sell, you need price appreciation or depreciation. And given we just had the 2022 bear, we've got that kind of backdrop of people having been shaken out for a long time. Plus, they're closing the biggest crypto exchanges. Or sorry, not closing them. They're suing them. That's going to spook a lot of people. And they're still not spending. To me, that gives weight to the fact that people just don't care. They're unfazed by it. If we compare it to the market size, the realized cap, same story. Pretty much all-time lows. Usually precedes major volatility. Tells us that the current range has exhausted what is going on. People need a new price range before they get engaged. Looking at the exchange front, there was a couple of metrics I just wanted to find here. Let me zoom in and just pick them out. These ones here. So long-term and short-term holders, how much of their supply, right? You've got 14.4 million coins held by long-term holders. How much as a percentage of that total are they currently sending into exchanges? Basically non-existent. Baseline. No response from long-term holders. They do not care. Extremely low values. We are not seeing any degree of spooking going on from the Binance, Coinbase, and everything else going on. Short-term holders. We are seeing most of the activity right now is being driven by short-term holders. It's not quite 1% of their balance, but it's 0.97%. So this is almost about to go red. When do short-term holders see a massive influx of coins? Naturally, bull markets make sense, but also periods. You can see here in the 2015 bear, this is when the market's finally getting some upside and people are just bailing out. Get me out of this thing. These are the tweets where it's like, Bitcoin's traded up from $100 to $200. I'm selling everything now and getting my money back, right? I'm down 50%, 60%. This is kind of that disbelief exit. The other time we see it is during major capitulation events, right? So we are seeing a bit of panic coming from the short-term holder cohort, but given there's no profit or loss, it's basically people who bought in the last couple of months, right? Most of them are probably underwater, bought at 30K and are bailing out. These are not hardcore people, right? And even though they are the ones spending, more than that amount is getting sucked out of the exchanges. So it's still net outflow. So, it's kind of shaking out those who are always going to get shaken out. This is the nature of markets. So even though it's an uptick, this is not something that's kind of setting off alarm bells for me. To me, it's actually falling into the bucket of expected behavior, to be perfectly honest. Right. This one here, actually, let me expand this out onto a full screen because I think this is actually just a ridiculously overpowered metric. Short-term holders. This is the only chart I want to look at for short-term holders, and this thing here is just an absolute weapon. You'll hear me talk about momentum quite a bit, and what we're doing here is comparing like a fast-moving average to a long-term moving average. So what I care about here, I'm looking only at the short-term holder cohort, and I want to see very fast accelerations in the amount of profit or loss that's being locked in by the short-term holder cohort. What's going on here? Okay, so what I'm really looking for is rapid changes in the environment. So when do you typically see this? Well, when price gets just imagine there's been a huge capitulation event, right? Back down here at these bottoms. Huge sums of coins have been transferred to new buyers, short-term holders. When price gets just a cent, 1 cent above their level, and the spending that they start doing is now profitable, and in particular, it's profitable relative to the amount of loss that was just getting locked in, right? In a bear market, note that the green, that's just non-existent. There is no profit to be taken, right? So what we are looking for is discrete changes in when suddenly we go from no profit to profit. Likewise, at the start of a bear market, note how when this thing fired off. This thing fired off, literally, going red, following the all-time high back here in April, right? So this thing is responsive as it gets. You start getting this acceleration from everyone being in profit. And by the way, this doesn't happen through the bull. This is when a large shift starts to change. And this is this is basically going to pick up when that momentum really starts to shift. In fact, you can see this thing was falling off a cliff before we even had the major sell-off. We are not seeing, we've seen a downtrend or a decrease in the amount of profit being taken, which in a bull market is actually not the worst thing to see. You actually want to see that. That's a cool down of the spending. Bear in mind, it does look a lot like 2019, right? So just be really eyes open here. But we haven't yet seen this downtick in this red metric. We have not seen an increase in loss-making spending. It's kind of status quo. Now, I will keep an eye on this thing and keep you all posted. If this thing starts to rip lower, you'll be the first to know. This is essentially telling me this looks a lot more like we have support at this point in time, demand alongside all the other metrics we were looking at. But what I don't really want to see is this thing start to accelerate into a bit of red, right? I want to see that momentum pick up of loss-making coins because that signifies a bit of panic. But to be honest, given the scale of what's out there and putting everything into context, right now feels a lot like expected behavior. So I'm conscious that this thing has declined and is kind of flatlining on the profit side of things. It's also because we're pulling back, and that's not the worst thing in the world. That doesn't mean it's going to go red. If this thing goes red, that's something to start paying attention to. But right now, it actually looks kind of expected behavior. We're essentially coming back for a retest. Let's have a look at 2017, just so we can visualize what this tends to look like. Let's drag it back just a bit more. Okay, so you can see here that we kind of get these bursts of profit taking, and then a little bit of red. Sorry, this thing keeps bouncing around on me. I've got a lot of windows open. Breaking higher, there's your profit, and then we get a pullback. Breaking higher, then you get a pullback. But you can see here that we never get any kind of sustained period of negativity, right? And when we do, it's because we actually have a fairly substantial correction. I actually think this one back here was like 50% drawdown, right? Which does happen in bull markets, as we know. But right now, when we're waiting for any kind of downtick on the negative loss momentum, and we want it to be short-lived. It can happen, but it's one of those things you just kind of flag, be aware of, and if it clears up, we'll start to see it reverse. So look, really, really tough market to gauge right now. A lot is happening. It's chaotic. It's just all over the place. There's kind of bad actors on all sides. But in many ways, a lot of this feels a bit like expected behavior. I'm not overly surprised. I mean, we've got almost all-time lows on the sell side risk, on RVTs, and all sorts of stuff as it relates to short-term holders. Short-term holder MVRV is just below support, right? Give us a nice bounce here, and that's textbook buy the dip type mentality. SOPR is grinding. Actually, this is the last one that I want to touch on. When I look at this is short-term holder SOPR, I'm looking for similarities of this like kind of triangle grind into break even, maybe a dip below, triangle grind into break even. But note that we are finding support. We are finding support on the break even level. There is only one spot on this chart that I can see anything similar. At the all-time high, we broke down and we went red, right? We did not get that kind of finding support type behavior. 2019, we attempted it, but then we had our breakdown below, right? And we kind of moved into a bearish market trend. The only other place that I can see something that looks like this grinding triangle back towards neutral and then finding support on a consistent basis is following COVID. Grinding down, support, 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 next bounce, grinding down, support, support, support. Even March 2020 was kind of a bit of a support level, and then bang. So, you know, it hard to read, but when I look at everything in context, people are buying the dip. Bitcoiners just do not seem to be shaken. And there's a lot of things here that fall into the category of expected behavior. And where I overlay on top of that, the level of doom that we should be feeling, given the magnitude of what's been going on, that overlay, just call me crazy, but I still feel this kind of net positive momentum exists, albeit with a significant dose of caution, just being really careful. We are below those key technical levels, and some may say that that's a doom signal. Others may say that's a value signal. This is the nature of markets. It's really hard to tell which one it is until after the fact. So we're kind of reading on the hard right edge as it is. Anyway, hopefully that's a useful update. There's a lot in there. But you know, again, in a market that's so tough to read, we're just trying to look at this thing from all different angles. And I will keep you posted and updated if anything else catches my eye. So other than that, hopefully having a great week, and I'll see you in the next one. Cheers.